Good afternoon, and thank you all for attending. I am Diana Cabrices, Account Manager here at Succession Link, and I'll be the moderator for today's webinar, Selling Your Firm Executive Briefing. As of October 2018, we are now over 38,000 registered members strong on the Succession Link platform. I would like to thank all of you in attendance for today's webinar and for being a part of our growing community. For anyone new to the community that may be in attendance today, Succession Link is the leading networking and communication platform for financial professionals looking to buy, sell, merge, and find succession planning options for their practices. As a platform, we look to provide resources, data, and educational content. And today's webinar is a great example of the type of content we like to bring to the entire community. Before we get started, there are a few quick housekeeping items to mention. First, this webinar is being recorded and it will be distributed by email to all attendees. It will also be available on demand through the Succession Link YouTube page. There you can find all of our past webinars and podcasts. And second, as always, for those of you who ask questions on your registration form, we certainly appreciate those questions and we will look to address as many of those throughout the course of the presentation. If your questions go unanswered in this presentation, we will make sure to get those questions over to today's presenter, James, to get answered in a follow-up email or phone call. So in July of 2016, we announced a new strategic partnership with Live Oak Bank for them to become a lending partner to the Succession Link platform. Live Oak Bank is one of the top originators of small business loans with one of the strongest loan portfolios in the country. The investment advisory lending team has built a loan portfolio of over $600 million in loans. Also in July of 2016, we had our first webinar with Live Oak Bank and have had a few additional webinars following. Based on the overwhelmingly positive response we get from these webinars, we are really excited to have James Hughes from Live Oak Bank here with us today to present on financing and more specifically on how it applies when selling your business to a qualified buyer. So a little about James. James Hughes joined Live Oak Bank in 2013 with over 8 years of sales, management, client service, and financial services experience. Since then, he has helped hundreds of businesses achieve their goals through financing. James has also served in several roles at Live Oak, including as a sales trader, relationship manager, underwriter, and loan officer. Prior to Live Oak Bank, James worked at one of the leading investment banks in the world. There he managed a group of derivative trading assistants and several client service teams. Through this unique experience, James has gained an understanding of the challenges that business owners face. In his current role as a loan officer, James is dedicated to assisting small business owners in the investment advisory industry attain success and continue to thrive with Live Oak Bank's products and services. James has a Bachelor of Arts in Economics from Bucknell University. And finally, James, I appreciate you taking the time to join us today, and welcome.
Thank you, Diana. I appreciate the introduction. And thank you all for joining us today. I'm excited about the opportunity to get to speak to you about the acquisition market. The goal of today is to really educate everyone on the acquisition market, where things stand today, and how deals are getting done. And the goal is really to make you all savvy sellers. So look forward to the event, and thank you again for joining. Okay, before we get into the meat of the material, I just want to briefly go over who Live Oak Bank is. I'm sure most of you have already heard of us, but I just want to give you some high-level detail. So Live Oak Bank is a FDIC-insured bank. We are located in Wilmington, North Carolina, but we have a national presence in that our largest portfolio is in California, Texas, and Florida. We were founded in 2008. Went public in 2015. We focus on small business lending and specialize in about 20 different industries. We have less than a 1% default rate. Actually, within our investment advisory portfolio, we have less than a 0.5% default rate. And the last thing I'll just sort of highlight is that we have just surpassed Wells Fargo and to become the largest SBA lender in the country. Okay, so we started lending to independent investment advisors in 2013. And as you'll see here, we have lent over $600 million into the industry. Now, we are a bank, so we will lend for any financing need that an independent advisor has. You see here that we do commercial real estate, working capital, general debt refinance, breakaways, and tuck-ins. But the bulk of what we do, about 65% of our business is tied to acquisition or succession or really book purchases. To give you an idea of the numbers, last year in 2017, we did 120 book purchases. Okay, so now that you know a little bit about Live Oak Bank, let's get into the market update. The acquisition market today continues to be a seller's market. There are a number of interested buyers for every one seller. The numbers that you hear are typically 40 to 1, sometimes you hear 50 to 1, all the way up to 100 to 1. What you need to know as a seller that there are a lot of buyers out there that are interested, but really what you need to focus on are the qualified buyers. So the number gets whittled down pretty quickly from 40 to 50 or 60, all the way down to about 4 buyers for every one seller. The typical deal has 3.5 offers on the table. As it continues to be a seller's market, we are seeing buyers become more aware of the acquisition market, and that being a good way to grow their business. So the sellers in the market today, that's the supply, and the demand has really increased. So that's why it continues to be a seller's market. Now, in terms of value, what we've seen is that transactional value or commission-based revenue continues to decrease in value, while recurring revenue, fee-based revenue or trails continues to be to hold steady, or even we've seen an uptick in 2018 in the recurring revenue being valued higher. The last thing that we're seeing is larger down payments are becoming more common. So you think about it being a seller's market and the seller wanting to take more risk off the table, and really the introduction of banks into the acquisition world, we're seeing larger down payments than we ever have seen before. As you think about selling your business, here are a few things to think about. We get the question quite often on when is the right time to sell. And of course, there is no perfect solution, but here's an example of a life cycle of an investment advisory's business. So early on in the business, the advisor is putting in a lot of effort to grow the business. Obviously, in the beginning part, the value of the business is at its lowest, and the expenses are basically right at a normal level, and the revenue is low because the clients are just getting brought in. Now, looking at the next stage, your effort is still high in trying to grow your business. The value is rising. Expenses have a funny thing of just continuing to rise, along with revenue also rising. Now, as you move forward, your effort starts to slightly decline. As your value is sort of peaking, the expenses continue to rise, and revenue is also peaking. So this is probably an example of the prime time to sell your business at its peak value. Now, as you move further into the effort sort of dropping off and you spending more time outside of the office, really the value is also dropping. Expenses continue to rise and revenue drops as well. Now, of course, this is just an example of not meant to. This is not a realistic value drop here, but it's a good example or exercise to go through to understand when would be a good time to sell your business. Okay, here are a few things that you should be thinking about when preparing your business for sale. The first two are going to be communication to clients and to staff. So having a clear communication line with the clients about your plans for retirement are going to be key in keeping the clients happy, both pre-transaction and post-transaction. Now, the staffing, you should also be having clear communication with the staff regarding the change and what that means for them, whether the new owner is going to be interested in keeping them around, or if the staff will actually no longer be a part of the business. So those are going to be key in having clear communication with both clients and staff. Now, as far as cleaning up your business before sale, three things here: workflow, financials, and presence are going to be extremely important. So making sure that you have strong workflows today before the sale are going to be extremely important, not only with getting a premium for your business, but making it attractive for sale. Same with financials. So most advisors are focused on the top line. Really having a strong bottom line is going to be the most important piece of financials in order for you to have interest in someone buying the business and also getting a premium for the business. Lastly, having a presence within your community, both a curb appeal and an online presence, are going to be extremely important in attracting buyers. The last thing we want you to think about is your plan, right? So your vision of retirement, what that's going to look like, but also your thoughts around the transaction. What are your goals? So what's the price you're looking for? How's that going to impact your taxes? Really, this is something that you need to spend a lot of time on. What are your goals for retirement? What are your goals for this transaction? Here's a question that we get a lot from sellers. How do I make sure they get a premium for my business? Well, here are 6 things that we see command a premium for a business. First up is growth potential. Has the business been growing year over year organically? If so, then a buyer would be willing to pay a premium for the book. Turnkey operation. There's a lot that goes into this. Really what's meant by this is how easy will it be for another advisor to come in and take over your business on day one and things don't run like it was before. So a lot goes into this, workflows and staffing, which we talked about on the previous slide, and then investment management style, really just the general operations of the business. Next up is going to be 100% recurring revenue. Your business has 100% recurring revenue, then a buyer would be willing to pay a premium for it. If your book is with a large broker dealer or even a large custodian, then a buyer would be willing to pay a premium for it. Profitability, as we mentioned on the last slide, having a strong bottom line is going to be key to commanding a premium for your book. Lastly is contingencies. So contingencies is some sort of protection for the buyer, where if the book does not perform, then there'll be a clawback on the purchase price. And that can be achieved either through an escrow account or through seller financing in some way. So if the seller is willing to provide contingencies, then a buyer would be willing to pay a premium for the book. Live Oak Bank has come up with a product for every strategy that one might be looking to do. So if you're looking at an internal succession where a junior is going to buy the business, or if you're looking to merge into another business, or if you're fully looking to sell and retire, we have a product that works for you. Many sellers ask us where they could find a buyer. Hopefully this next section will shed a little bit of light on that. Okay, so here's our list of different ways to find buyers. Obviously, there's listing services out there. Succession Link is a great place to find a buyer. Most of the deals that come to us come from networking. So we really encourage sellers to be out there networking at all the industry events and really within their community as well. Now, when looking for a buyer, we always say that the 3 C's are going to be the most important thing. So culture, character, competency. As you see here, the last thing that you want to look for are they bankable? So from the 40 interested parties down to the 4 qualified buyers, the 4 qualified buyers are obviously all going to be bankable. The number one thing that we suggest a seller to look for is going to be culture. If that doesn't match well, then the rest of it won't work. Okay, so now we've come to the most complex part of this process, which is structuring and financing the deal. There are 3 components to every deal: price, taxes, and terms. The next few slides, we're going to walk through how all of those tie into the typical deal. Okay, so before we get into more of how to structure these deals, I just want to take a moment to talk about valuation. And so as we mentioned earlier on in the market update, the recurring revenue is sort of held steady at 2.4 times. And actually in 2018, we've seen an uptick to 2.6 times. Now, on the reverse of that, the transactional revenue or commission-based revenue continues to decline. In 2018, it is still right around that. It's sub 1 times for the most part. Okay, so let's talk about taxes. Three different components for taxes: consulting and the restricted covenants. Restricted covenants is just your non-compete and non-solicit. Now, the goodwill or the client list is going to be taxed at long-term capital gains for the seller, but the buyer is going to be able to appreciate that over 15 years. So this is really an advantage to the seller, and this typically represents 90% of the deal. Now, the consulting piece of this is taxed at earned income, and the buyer can deduct this as a business expense each year. So this is really an advantage to the buyer. This typically represents 5% of the deal. And lastly, we have the restricted covenants, which is taxed at ordinary income. The buyer depreciates that over 15 years. So that's really a wash. It is an advantage to either buyer or seller. There are 4 ways in which these deals are financed. The first one is an earnout. So there are 2 types. One in which the buyer agrees to pay a percentage of the revenue for a fixed period, and the total will vary. So I'll pay you 50% of the business for 3 years. Or the buyer agrees to pay a percentage of the revenue until a total is paid, and the period will vary. So I'll pay you 50% of the business until you hit $300,000. The second way is through cash. The third way is a seller note, and that's going to be fixed or variable. And really what's meant by variable is that there will be an adjustment or contingency within the seller note so that if the book does not perform, then the amount in the seller note will actually be reduced. The fourth way that these deals are being financed is through a bank note and hopefully a live oak bank note. Okay, the next 2 slides we're going to walk through are going to be the way these deals are being structured prior to bank financing and the way they're being structured today with bank financing. This is sort of the historical model in which the buyer came up with whatever cash they come up with, which is typically anywhere from 0 to 30%, and then the rest was really paid out through an earnout. As you can see on the risk meter here, the seller is taking on a lot of risk in this transaction. With only being able to monetize up to 30% of the business on day one, the seller is going to be very involved with the business because they're still waiting for 70% of the value to be paid to them. From the buyer's standpoint, this is typically on a shorter term. The payback is usually over a 3 to 5 year period. And a lot of times the buyer is not cash flow positive on the transaction because of that short payback period. Now, with bank financing becoming more prevalent, the down payments have really increased. Live Oak Bank is willing to do up to 100% financing. And when a buyer is coming with all cash, we are seeing some discounts on the purchase price. As you see on that risk meter here, the buyer is really taking on a lot more risk. The seller is de-risking as they're able to monetize more of the value on day one. Therefore, the seller is really less involved in the business. Another advantage to this structure is the buyer is able to put most of the transaction, if not all of it, over a 10-year term, and therefore the buyer is cash flow positive on day one. Very quickly, I just want to go over how a buyer will qualify for 100% financing, as this has become more and more prevalent over the past year and a half. The first thing is that we are limited to lend against the valuation amount. So we require a third-party valuation company to do a valuation on any deal above $250,000, and we can only lend up to that amount. The second rule that needs to be satisfied is the equity injection rule, which we'll show you on the next slide. And then the third is the cash flow, which we will also show you. Okay, on every single one of our acquisition deals, we look for 10% equity injection. That can either be met by cash, a seller note on full standby, and cash, or leveraging the equity in the buyer's firm. Now, if you're an independent advisor, or if your buyer is an independent advisor with a book of business already, we typically can leverage the equity in their business and therefore do not require any cash in or any seller note on full standby. Here's some parameters on how a buyer qualifies for a loan. They'll need a 680 or better on the personal credit score with no bankruptcies or tax liens. They'll need a debt service coverage of 1.75, which we'll walk through. And then lastly, we look for a good proven track record in the industry. Just one other point I want to make here is that we do require a strong personal financial statement for our borrowers. Here's a look at our process. So for the buyer, they will complete the application, receive a proposal letter within 2 days, receive official approval within 2 weeks, and then the closing process takes approximately 4 weeks. We suggest for every buyer that they allow for at least 2 months in order to start the application and fund the deal. Here's a couple things that we've seen through doing as many deals as we have. And typical attrition rates are very low, anywhere from 1% to 6%, depending on whether it's a junior buying a senior or if it's within the same broker-dealer or custodian or outside of that broker-dealer or custodian. Some other things that we highly suggest is that that there be a plan for the transition at the beginning of the process, right? So both buyer and seller should really be on the same page from the start on how the transition process is going to go. Both buyer and seller should come up with and agree on the messaging to the staff so that they're all on the same page. Lastly, we suggest that the client book be segmented, which I'm sure most of you already do, but from A to B to C to D clients, and really have a strategy for transitioning those different segments. Thank you for joining us today. I hope that this was informative and you feel like you are now a savvy seller. If you have any additional questions, feel free to give me a call. I'll be happy to talk to you. And if you just want to learn a little bit more about the acquisition market or our product offering, you can go to our knowledge bank, which the link is right here. Thanks so much.
What a great presentation. Thank you so much, James. Now let's turn over to our live question and answer session and answer a few questions for our audience. So, James, what trends are you seeing in the industry right now?
Yeah, as far as trends that I see in the industry, definitely continue to see the trend of recurring revenue commanding a premium and commission-based revenue really taking a dip as far as what that's worth. So we showed you in the presentation that recurring revenue that historically at 2.4 times, and now in 2018 we're seeing that go to 2.6 times. And commission-based revenue really has dropped below 1 times and is sat there for the past 2 years.
So what are some of the things to focus on if an advisor is preparing to sell their book of business?
An advisor that's looking to sell their business, they should really be thinking about, sort of cleaning up internally, right? So that starts with, the staffing. Do they have a strong staff in place? Workflows. Do they have strong workflows and processes in place? A strong bottom line, so is their expense structure good and strong? If the answer to any of those questions is no, then you really need to fix those things if you want to sell your business for a premium.
So does the purchase price usually match the business valuation? I know you talked a little bit about this in the presentation.
That's a great question. The purchase price rarely equals the valuation, and that's because the larger the down payment, we typically see a discount off the valuation amount versus the other way around. If there's a small down payment or no down payment at all, then there's typically a premium paid for the business.
Okay, now here's a question that we got from one of our viewers. What are some of the most successful transactions that you have seen?
Yeah, we showed you a little bit of that through the attrition rates. Definitely the most successful transactions that we see are going to be junior buying senior. So an internal transaction where the junior has been there for several years, he or she knows all the clients. There's really going to be a minimal change and impact to the clients with no repapering and really all of the staff staying in place.
Now, on the opposite end, I would ask, what are some of the least successful transactions that you've seen?
Right. So take that first example and just sort of flip it on its head. A transaction where the clients are having to move from one broker dealer to the other or one custodian to the other, and maybe location wise, somebody in Oregon that's buying a book in Florida. Anything that sort of adds some additional risk to the attrition is what we're going to look at as being a riskier transaction.
How about the approval and underwriting process? How long does it typically take from start to finish?
Yeah, so the approval process from start to approval typically takes 2 to 3 weeks. And then the closing process takes another 4 weeks. So that's why we always say to allow for 2 months.
Right. And now, what are the typical loan terms that you're seeing for advisor acquisition loans?
Our typical loan term for an acquisition is going to be a 10-year term, and our loan minimum is 75,000, and we'll lend all the way up to about 8 million.
Now, here's another question we got from one of our attendees. So, I've been in talks with a potential buyer for my business, and they're having a hard time getting approved. I've heard about seller financing. Would that mean an earnout?
Seller financing could mean an earnout, yes. An earnout, as we showed you in the presentation, there's two types of them. Basically, you're paying the seller a percentage of the production for either a period of time or until they hit a certain dollar amount. Now, the other way to do seller financing is just a seller note. So you assign a value to the seller note, so $500,000 over a 5-year period, and the seller might even ask for interest on that note.
Well, thanks so much, James, for running through some of the questions for the audience. And thank you again for a great presentation. It was very insightful, and I know that all of our viewers will benefit from the information that you provided. Also, I'd like to thank you for your partnership. One thing that you had mentioned that I'd like to remind our audience about is how to get additional information about financing through Live Oak Bank. There are a few different ways to access the Live Oak Bank financing form. If you are a registered member, once you are logged into your account and are viewing another member's listing, you will see a Win the Deal ad on the top right corner of the listing. If you click that ad, it will bring you to a form that pre-populates with your information that we have on file. Of course, you'll want to update any information in the form that may have changed or that is not populated and simply submit the form. From there, a member of the Live Oak team will be in touch with you shortly. Also, on any member's listing, you will see an Apply for Financing button that is alongside the Contact button and the Calculate Deal Terms button. Those all sit on the top of the listing. Another convenient feature and way to access the form is if you have used the Deal Terms calculator on the Succession Link site to calculate the value of any practice that you find in the marketplace. You will see a Click to Apply for Financing button that appears just below the estimated buyout price on the calculator results. If you click that button, it will pull in the details from the practice in question, and again, you'll want to update and complete the form and click Submit. Or you can always feel free to reach out to our customer support team at info@successionlink.com, and they will point you in the right direction. Thanks again to James, and thanks to everyone in attendance. We certainly appreciate your continued support of the Succession Link community. From behalf of all of us at Succession Link, have a great day.